Hello. My name is Michelle Cooper, and I am the owner of Alchemy Accounting and Bookkeeping Services based in Chilliwack, British Columbia. And today I want to share with you some important information if you're a business owner. And we're talking about your business credit score. So, business credit score is sort of an ominous, mysterious thing. Some of you may not even know it exists. You may know about your personal credit score, but your business also has a, a credit score. And a business credit score ranges from 0 to 100. It's a very easy number that is calculated for you. The higher the number, the better your score. And your credit worthiness is calculated using several methods, including payment history, outstanding balances, and trade experiences. So much like your personal credit score, this numerical evaluation of your business allows creditors and lenders, such as banks or credit card providers, to determine whether or not they will approve you. If you are a client of ours, you will know that I often talk about having separate business credit cards. And ideally, we want a credit card in the name of the business, as well as your own personal credit cards that you might deem just for business. So, your business credit score would also be used when you apply for insurance, for a lease, or any kind of financing that your business might need. The higher your credit score, the more likely you will be approved, and the better the interest rate will be. So let's talk a little bit about how this score is calculated and by who. So the first company that calculates a credit score is Dun& Bradstreet. They measure a company's risk with a PAYDEX score that ranges from 0 to 100. The number you receive is based on payment data, and it determines whether to extend credit to you and exactly how much. You can get your report directly from Dun& Bradstreet, and I have a link on my website to that. The second place is Equifax. Now, you might know Equifax from your personal credit score. Equifax offers 3 different assessments to determine your score. Your payment index reflects payment data for vendors and creditors, including whether or not you've been paying on time. Your business credit risk score, which is the second way, shows the probability of your company becoming delinquent on payments. And finally, the business failure score measures the likelihood of your business closing within 12 months. Again, you can access your business's credit report on the Equifax website. You can get the link on my website. And the third one is Experian. Experian their report features information, including payment trends, public records, and account histories. This is not like the others because it factors in balances from outstanding loans and payments, liens, judgments, bankruptcies, public records, and collection agencies. It's an important one to have an optic on because it often can have mistakes in it that you need to correct. So, how do you improve your business credit score once you know what it is? Well, the first thing is pay your bills on time. Even one missed payment or a late payment can hurt your business credit score. If we relate that to our personal credit score, you may know that like late payments lower your score, but it's fairly like one late payment isn't going to lower your personal credit rating too much. In your business credit score, it will. So pay your bills on time. Making sure that you have a balance, like all your balance paid off, and pay it off as soon as possible. So reducing the balance on any credit cards will have a positive and immediate effect on your credit score. When you have a favorable payment history, you can then request an increase of credit from your credit card provider. The third way really is to know your credit score. So like don't make this a last minute thing. Don't make this something that you're trying to check and fix right before you apply for some kind of major loan. Get it now. Understand what it means now because it takes time to fix any errors and you can drastically improve your credit score in a short amount of time if you do a few things, which I'm going to tell you about in a minute. Be aware of how these three different reporting agencies use the data. So they all have specific things that they look at. And so understand what those things are. I covered them a little bit, but basically, Dun& Bradstreet really recommends repaying debts on time or ahead of schedule. Equifax really is paying attention to missed or late payments, past due accounts, past collections, and frequent credit applications. And Experian focuses on some of those same things that the other two focus on, but in addition, it's looking at um, uh, the judgments or collection activities. So make sure you're aware of what they look at and address those things. Always be aware of anybody that is pretending to be you. So people pretending to your business, pretending to be your business, and taking out credit in your name. Now, here's a key thing. Now, this can have a significant effect. Understanding ratios. Right? So when we look at a credit report, we look at the ratio of credit used in relation to the amount of credit you have available. This is called a credit utilization ratio. And for the lower the number, the better it is. This is really important. So, how do you decrease your number? Well, it's all about getting back to basics. Much of what we have discussed applies to your credit utilization ratio. For example, if you pay off your balance right away or you get it to as low as you can, that's going to lower your credit utilization ratio. You can also ask your credit card issuer to increase your limit and not use it, and that will decrease your uh, utilization ratio. So even though it may not seem like an opportune time to do so, opening up another line of credit or getting a increase in your limit can actually improve your credit score. Think about your history, right? When you have a solid history of managing credit, you show that you are a good like a low risk for taking on any kind of debt. Sometimes we have to learn the hard way, right? Sometimes we unfortunately have to go through the struggle to rebuild. And it can be very simple to rebuild your business's credit history. I totally understand that the topic of business credit scores can be intimidating. You might be thinking, I can't even think about this. Like, I'm in such a mess. So I'm going to give you credit for sticking through this and watching this video because, there's a little pun there. See what I did with those words? Because this can be emotional for a lot of people. So managing your score isn't far off from how to manage your personal credit. It does take a little bit of nuance, does take some knowledge and awareness. Your personal and business finances need to be separated to make this process more seamless. It's vitally important. No matter how you start or continue to manage your business credit score, it's essential to establish good habits right from the start. If this is work that you want to do, I really encourage you to reach out to us at Alchemy Accounting and Bookkeeping, where we can provide you with amazing bookkeeping and accounting services, as well as coaching and consulting to walk with you every step of the way as you step into a new relationship with your money and learn to fall in love with your numbers. I'm Michelle Cooper from Alchemy Accounting and Bookkeeping, and I encourage you to say yes to the mess, fall in love with your numbers, know your numbers, and take that next step. See you guys.